Hi there, good afternoon. You've tuned into ET Now. This is Closing Trades with me, Cheryl D'Souza. If you look at the markets at this point in time, we have been actually trading range bound for the entire day actually. Right now, we are in the negative territory, seeing a downtick of about 44 points on the Nifty. We are sub that 24,500 mark when you talk about the Nifty index. Talking about Nifty Bank, that one has been outperforming the benchmark indices and it is actually seen some sort of a moderation of late. But yes, 330 points uptick coming in for Nifty Bank. Advanced decline ratio, however, has tilted a tad bit in the favor of the declines. That's because also you're seeing what is happening with the broader markets. We have the mid-cap index at the day's lowest point at this point in time. Let's take a look at list of gainers then. You have Ultratech that's seeing good uptick, about 2.5% or 2.8% at this point in time. You have Shriram Finance, M&M, SBI, Titan, all of them seeing good gains in trade. HUL is the one that is seeing some sort of downtick on back of its earnings. 6% down it is at this point in time, with SBI Life, Hindalco, Nestle also being the other set of losers. But let's talk about some of the counters that are in focus on back of news. You have HUL, like I mentioned, that one is declining on back of its earnings. Apart from that, you have Hindalco that's reacting to the earnings globally of one of the companies, and that's the reason why you have Hindalco that is under pressure in trade today. Let's put the spotlight then on some of the other counters. You also have Sona BLW that is seeing an uptick in trade today on back of that sort of acquisition coming in for the Escorts railway business. In fact, we spoke to the management earlier on in the trading session, and they said that the acquisition of Escorts railway business will be EPS accretive from day one. Listen in.
This one should be EPS accretive from the first year itself, and hence it's a fairly good value for us. One of the things that is very important for us is that it should start being accretive on an EPS basis pretty much immediately, right? 4,000 crore, if you'd bought it at, it would not have. It would have taken way too long. And in an uncertain and cyclical industry like railways, you can't be paying that much. I think we paid a fairly fair price.
All right, so that's the management of Sona BLW talking about the acquisition, what it means for the company. While Sona BLW is the one that is gaining in trade today, let's take a look at what Escorts Kubota is doing, because that was the one that was touted to be on the back foot on back of this deal, and that's the reason why the stock is down approximately 6% as we speak. But what's the market set up from here on, and which are the sectors that are looking attractive, which are the space that you should bet on? We have Sandeep Sabharwal joining us on the show right now. Very good afternoon to you, Sandeep. And yes, the markets have not been doing anything. I think your break, and that's what markets were doing. They were also taking a break from the rally.
Yeah, so I think beginning of the result season, it was very apparent that given the levels of the market, it's very important for the results to come out in a manner where the results are such that they help sustain the market move. However, I think across industries, we have seen that results have been somewhat subdued, be it financials, where we've seen some stress built on the balance sheet, as well as pressure on net interest margins, or be it cement, where earnings have come in much below expectations. IT results were in line, but nothing great to talk home about. Consumer names have reported disappointing numbers. So I think the result season is on, and markets are trying to absorb that entire news flow at valuations which are higher than historical valuations. And on top of that, we also have a phenomena where reallocation is happening from India to some other emerging markets. So I think that was estimated to be around, should have been around $15 odd billion. So that should be more or less true. I think another $3-4 billion maybe. And then things will go back to fundamentals.
And like you touched upon, actually talking about the fact that it's the earnings season, and that sort of may have had a rub up on the markets. And talking about the earnings, if you touched upon consumer names, FMCG sector, those earnings have been actually disappointing. They have not shown a growth of as much as the street was anticipating. 3 months ago, everyone was talking about how FMCG could be a trade on back of the shift in the policies or better monsoon. But that doesn't seem to be transpiring, isn't it?
Yeah, so there was an expectation because 2 years of subdued growth in the consumer sector combined with the moderating inflation as well as normal monsoon should lead to some sort of revival. However, that's clearly not played through, and uh, it's possibly a reflection of the pressure on the pockets of consumers and the income levels not rising at the same pace at which the inflation has been over the last few years, even though it's in control today. So many of these companies are now indicating that the festival season and as the rural incomes start coming in going forward, things could be better. But on the urban side, things seem still subdued. So the recovery is pushed back, and that's the result. And that's what we are seeing in the stock price of most of these companies.
Right, so that's the way how the FMCG sector is panning out. Looks like the recovery is a bit pushed back, and you've seen actually some of these names actually under pressure in trade today. You also had Colgate that came out with his numbers earlier on in the trading session, and you can see the stock is also under pressure in trade today. We have Naresh Mirani joining us on the show right now. Good afternoon to you, Naresh. And today looks to be a better off day. We've been actually trading for the most part of the trading session in a range.
So on the index, we are in the range, but the breadth is not as great as it should be given the markets. What we saw recovery in the mid cap and small caps yesterday. So we still continue to grind in a very tight range. Almost the last few hours, Nifty has been in the range of 20 to 30 points, or rather 40 points. That's too small a range for an index which is 24,000 plus. So overall, we are still finding a base around this area. But once we cross 24,800, that is where we call a trend change. So for now, we are still stuck in this selling pressure as such. Overall, we are seeing rotation in terms of sectors topping out. So it is FMCG after a huge rally from June to now has topped out. Pharma is taking a back seat. But the good part is banking space as such has been looking much better compared to the index.
What's your take actually, Naresh, when you talk about the real estate sector? How is it looking to you? Because off late it's not been having a good time. Last 1 month has not been pretty good for the space. Today also is under pressure, about 1.14%. What's your take on the real estate space? Do you think that this one is taking a breather after a spectacular 2 years that this one had seen?
So it's a breather, and there could be, say, some supports going back to the June, July lows. So we had a clean run on the Nifty real estate sector from 2023. We barely had any correction of more than 8 to 10% on the index as such. And the index had topped out a few months back in June, July. And now we've been consolidating. So you can pick up a DLF, etc. They've been consolidating for the last 6, 8 months. But I would expect closer to the lows of June, July, that should not be broken. So we are getting close to that price points. We are at July lows. Election lows are another, say, 6, 7% away. So I would expect a bottoming out case for some of them, but the bounce may not be very sharp. So for now, a consolidation after a 1.5 year strong rally.
Is back. He's back from US looking fresh. I thought you would be jet lagged and all groggy.
Yeah, I'm sorry only.
How's holiday?
Yeah, very nice, very good. It's a great country to visit.
Did you meet any FIs and did you ask them that why are they selling India?
No, that we don't need to ask. We know that that reallocation trade had to happen. And that's playing out. So it's good. Like it leads to some sort of correction.
Are we reaching that stage, Sandeep, where it's time to start buying the fear? It's not about Nifty, it's about individual stocks. Average correction in PSU stocks is about 30%. Average correction in some of the PSU banking stocks is more than 20%. Fundamentals have not deteriorated that badly that it warrants a 30-40% fall.
Yeah, but the rise also was so phenomenal, and the main issue was that too many people got into PSU stocks and many of the fancied sectors, and that's leading to this sell-off. We could still see some more sell-off in the PSU side, but my base case was that at the peak of the market, that 23,900, 24,200 should be the range where market should correct to. Results have been a bit more disappointing than what I thought they should be. So to that extent, I would still think that the bottom could be around those levels only. But the we could get into a range kind of market, and like you rightly said, then it becomes a stock specific market once the big sell off ends, and that is something we should see starting from November.
On your radar, which you would like to buy at a 5% decline, you'll add more at 10% decline, and you'll add even more if it falls 15%. Sandeep.
On the large cap side, I think Reliance has corrected 20% from the top. So for most of the large caps, if we have to assume that it's a bull market on, a 20% fall from the top typically should be something we should keep a track of and buy at those levels. Um, on the consumer side, like HUL again is down around 17, 18 or maybe 20% from the top. So if it goes to around 2200 levels, I would think that 2250 also, I would think it could be interesting to buy into. And LNT, I think even at these levels looks okay. So if the overall market corrects, if it falls another 5%, I think that should be another stock we could look at. Or some of the auto stocks also, if they fall another 5-10%, like a Bajaj or a M&M or Maruti.
Bajaj, M&M, Maruti from the auto space, Reliance and L&T. And there's one more which I missed.
HUL.
HUL. Why HUL? I mean, isn't that expensive? And the growth, even if it comes back, it could be a, 2 will become 3, 2 will not become 20.
And that's true, but for most of the consumer stocks, it's been my historical observation that when many of these stocks correct 25-30% from the top, so I think HUL went to around 3300. So if it comes to around 22-2300, it will represent a potential candidate for 15-20% kind of return. So in a low volatility stock, if we can make 15-20% in a year, I think that's a good return.
Let's switch gears and talk about Reliance. I think Nuresh spoke about it in the morning and Sandeep has just flagged it off. Is Reliance reaching that point from where the upside could be more and the downside could be less? It's just been a straight line fall, guys. Just dog of a stock in terms of underperformance. Let's look at the 1-year chart. And if you look at the 3-year chart, I think Reliance post-COVID was the talk of the town. They're doing everything right. Raising capital in their subsidiaries, foreign types were coming in, Jio came, Meta came, Google came. They did a partnership with Apple. They started investing in companies. Everything was going right for Reliance immediately after COVID. But then, ever since they've started increasing their capital expenditure and the debt what they've raised in the balance sheet, markets are saying that, okay, will they have to do another round of capital raise? And that in a sense is pushing the stock down. In last 2 years, 3 years, Reliance has given a 2% return. I can add back the value of Jio and say, okay, it's actually 300 rupees more. But bottom line is that, Nuresh, this is a stock which almost had consolidated for 3 years now.
Tendency for Reliance, if you go back even previously, after say 2010, it did nothing for multiple years. We had this huge rally in 2017 to 2018, then we corrected with the markets. 2021, it topped out, then 1 year it did nothing. Now, it looks interesting for the fact that the correction has taken it back to the prices where it was 1 to 2 years back, roughly maybe at 10% more due to geofinance. Also, the fact that the stock is below the June 4th lows. Now, that is the point of time where Nifty was 21,200 to 22,000. And that time the stock was at say 2,700, 2,740. So out here at 2,650, 2,700, the stock has a 1 year return of 0. Also, the fact that it is below almost equivalent to a 21,000 mark of the Nifty. It's a good entry point if one is ready to digest another 5-7% of volatility, but I would expect a bottoming out case here and eventually a move towards 3,000, 3,200 over the next 1 year.
Right, target of about 3,000 to 3,200 over the next 1 year coming in for Reliance Industries. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, we will track the market move and also ask our experts which side of the fence are they betting on right now.
All right, in conversation with our technical expert, Sandeep Sabharwal is there, and we just are trying to understand that where the bottom formation or where the base formation for the market is. Sandeep, what to your mind in this market is still expensive after a 20, 30 or a 40% correction?
I think I wouldn't say that things are so expensive that they can fall 30-40%, except maybe very speculative small and mid caps, which have not really fallen so much. On the large cap side of the market, I don't really see stocks which can further fall 10-20% from the current levels. So, and some on the large cap side, I think we'll see the bottoming faster. On the mid cap side, there is still some speculative froth that could get taken out over the next few weeks.
Is there merit in buying Hyundai, Sandeep? It's not expensive. It's got margins which are better than Maruti. And if you're buying it now, you're buying it actually at the peak of pessimism.
So Hyundai, I haven't evaluated it so closely at this stage. So very tough to comment. But I would like to see one result of the company post listing as a listed company. Unless and until it suddenly sells off substantially, and then we need to have a look and then take a look at the stock.
Nuresh, what is the reading of the small and the mid cap index in terms of the chart patterns?
So we've not seen a very sharp correction as such. If you look at it in terms of the Nifty 7%, we are also down 8-9%, similar on the small cap indices and the mid cap indices. The only case is the indices have come back to the lows which were made in July, very close to it. So Nifty Small 100 is back to the July lows, which is an equivalent of 23,800 to 24,200. We've not seen a similar tick there on BSE Small Cap, but overall, we are very similar to where the Nifty is. We've not seen an over fall. Generally, what we see, the high beta nature of small caps is the Nifty falls 5%, they tend to fall 10-12%, which has not happened. So we are still in line out here. So nothing major of a divergence, but a consolidation continues. So for the last 6 months, 3 to 4 months, it's almost flat.
Right, that's the take coming in the broader markets. In fact, we spoke to Dinshaw Hirani earlier in the day where he's saying that it's time now actually to look at or not look at broader markets. He's saying that he still sees a lot of froth in the broader markets given the recent outperformance, and he believes that it is good to stick to the large cap players.
We still believe that there's a lot of froth in the small cap and certain pockets of mid cap. Right. Besides that, I mean, if you look at the overall market cap of the NSE 500, which is probably 90-95% of the market as such in terms of market cap, we've done an analysis. So if you look at the 2/3 of that market cap, it still quotes at P's of 19.5 times forward earnings, which is a fairly decent P to be on. I mean, if you look at the last 15 years averages, we are at 19. So we are nowhere there. So I don't think the large caps really participated in this whole rally. It was mainly the small and mid. Actually, if you look at the last 3 years average CAGR for NSE Nifty 50, it's around 13% which is nothing. I mean, it's not even repeating what it did in the last 25 years, which is around 15-16%. So we're quite happy with the large cap portion and obviously very selective in the mid cap space. Obviously, we are avoiding the small caps as of now. We like Infosys though, and we own Infosys. But besides that, look at the IT pack. I mean, overall, I don't think it was a problem, right? Basically, what are you talking about? We're talking about reasonable valuations, mid-teens kind of growths in the IT pack, which is quite okay for us. I mean, looking at the other bank results, you can really now take your hats off to HDFC Bank saying that, look, this guy he was always concentrating on his quality of assets, and that is what played out for him totally. And that's why HDFC Bank is doing what it is right now against the whole pack. So these are the kind of names that we are always looking out for. And I think we are fairly comfortable with the kind of large caps we have in our portfolio.
All right, Aditya Agrawal is also there with us. Aditya, there's one chart the chart of Zomato, how's that one looking? Because suddenly the stock is down, 20% from its recent high?
Hi, good afternoon. Thanks for the show. I think there is some more pain left in the stock, even though the fact that the fundamentals have been going good for the stock. But just purely going by the chart setup, there are negative divergences. It's sitting at overbought levels. And I think there is some more correction left in the stock. So I would be a buyer maybe around 220 or maybe 210 levels, not at current levels. I would let the stock cool off, correct more from these levels. Maybe a more time-wise correction is required in the stock rather than just price correction.
Sandeep, it's interesting that Zomato is down, which is delivering, and Paytm is up, where we still don't know the clarity in terms of when the turn will happen. Zomato has gone from 300 to 250, 260, and Paytm has gone from 400 to 750. Which is a better one right now, Sandeep?
I think the Zomato fall is more to do with a fundraising announcement, which took people were surprised as people thought that as they started to report profits, so they should not be there. So I think that's the one factor, which, and plus the increasing investments on physical infrastructure, which could depress earning ratios, like the return ratios, even as the profitability remains. So my guess is that Zomato, once it completes its fundraising, etc., then I think after a period of consolidation, because all of us have to recognize that it moved from 50 to 300 almost in a straight line. I think some sort of corrective move, consolidation is imminent. But longer term, among all the companies on the platform side, etc., or the new generation companies which have listed, Zomato has the strongest business model.
So that's the take coming in on, all right, that's the take coming in on Zomato as well as Paytm. Thank you so much for joining us, Sandeep, on the show to give us your take on the auto pack, on the QSR space as well. But coming to you, Naresh, I wanted to understand what are your closing trades?
To be a lot more defensive. Looking at Apollo Hospitals, stock has been showing relative strength. So could be a small bounce back towards 7,050, 7100.
Apollo Hospitals coming in for Naresh. And Aditya, what are your closing trades for our viewers?
Buy recommendation, Cheryl, because I think markets are trying to form a base and there are a lot of stocks which are trying to bounce back. So Coromandel is something which is looking interesting to me in the chart setup. Most of the fertilizer stocks are doing well. So at current levels, it offers an excellent risk to reward, can be bought for a target of 1800 with a stop loss at 1450, 1540, I'm sorry, on the downside. The second stock is Emphasis. The IT pack is also looking interesting and it's been holding ground from last two trading sessions. So Emphasis is something which is looking, again, very interesting, on the verge of a breakout into an all-time high territory. So at current levels, one can look at buying. Stock is trading soft at the moment for a target of 3400 on the upside with a stop loss at 2940 on the downside.
On that note, we'll slip into a break on this edition of Closing Trades, tracking the markets. We are a tad bit off the day's lowest point. Welcome back. You're watching Closing Trades right here on ET now. You have the broader markets that are under pressure, but your benchmark indices are staging a rebound at this point in time. You have the Sensex that's in the positive territory. Nifty Bank holding on to gains of about 0.5% or so. HUL, SBI Life, Hindalco, Nestle are some of the counters that are under pressure in trade today. We are joined now by Chakri Lokpriya to talk about the markets and the sectors that are looking attractive, or what's the way forward for the markets. A very good afternoon to you, Chakri. Thank you so much for joining us in ET now. And Chakri, looking at the way how the markets are performing at this point in time, no doubt you've seen the broader markets take a breather. Along with that, now you're seeing the FMCG players as well as auto sector actually take a break. Do you see this as a part of a larger slowdown that's underway?
Good afternoon. In fact, we spoke about the FMCG slowdown on your channel some few weeks ago. This is a trend which is with companies in FMCG in India is there has been no product innovations, that they haven't been able to increase prices, and therefore volumes are going up in line with inflation plus at best. And on the other hand, premiumization, which people talk about, is actually more than that, is what is needed is innovation. So, and when that is not happening, therefore the margins come down, which are coming down, and therefore I think the multiples will therefore actually come down as a result. So until this trend breaks, and I think that's something across FMCG, and we need to see them hopefully come up with some new business strategies.
Okay. What has been your investment activity in this fall? Are you buying? Are you sitting on cash?
We've been buying, but we got some things wrong in terms of metals. But I think, metal still has been a very confused environment globally. China has just not managed to recover. So therefore, that weakness in metals is likely to continue. On the other hand, IT is something which has done well. And, irrespective of the outcome of the US elections, whichever president comes, IT will see that cyclical uptick. And therefore, Indian IT companies will benefit. So I think that's a safe trade, safe investment to make.
Right. Chakri, just wanted your quick take coming in on the players that is your space that is in the quick commerce space. What's your take coming in? You have Zomato, which is now gone ahead and just ahead of the festive season, hiked some fees. You also have Blinkit, which is a part of Zomato, that is now going ahead and offering EMI services as well. What's your take coming in on that space? Do you think that quick commerce is here to take over the brick and mortar retail players as well?
Whether it's Zomato or Swiggy, they're discounting prices anywhere between 20 to 30% or more, depending on everyday items like your toothpaste, bread, and items like that. And therefore, a consumer finds it easier to buy it on quick commerce, and therefore pulling down the margins of the brick and mortar retailers, and in some cases actually selling below MRP. So this trend is unlikely to, it will be a cash burn for Zomato and Swiggy. Zomato is doing also a cash raise. I would suspect that part of it will be good to help the company push through these volumes. So I think, that trend needs to reverse, which we've seen for several other e-commerce companies happen in the past. So therefore, I wouldn't really look at it as sustainable volume for Zomato, and therefore wouldn't buy it now.
Okay, Laurus numbers have also come out. This has been notoriously volatile stock. Just goes here and there. What is your chart analysis of Laurus, Nuresh? We've discussed this one. It is a notoriously volatile stock. I think it's an FNO also tends to really swing.
So apart from the swings, if you look at the stock price, it has not trended well for the last 1.5 years. It had its huge rally back in 2020-21, topped out at 700, drifted all the way down to 300, 350. Now has made a comeback over the last 1.5 years, but it's been a very slow comeback. So from 300 to it went to 500, 520. Every time it has made a new high, it has gone back and corrected 15%. So does not really show a lot of momentum, has created more breakout traps than any other stock in the last 1.5 years. So overall, we are still stuck in this band. The only difference is 400, 420 has not been broken for the last 6 months. So that remains a strong support. And if it starts sustaining above 490, then one can start looking at it.
Okay. Laurus, 178 versus 188. EBITDA is down. It's I don't track this one, so I really don't want to comment on this one. But I do track Piramal Pharma, and those numbers have been blowout. This entire CDMO space, I think, is looking exciting. So if Piramal has done well, I think the rest of the pack has to come back, which is DVs and maybe to some extent Sun Pharma. This entire CDMO place will have to make a comeback. Chakri, what do you like from the pharma space?
Nikunj, like you rightly pointed out, the CDMO pack business is doing well for issuing revival. There is some amount of pricing power. There is volume picking up outside India, and companies like Piramal, maybe DVs, but these stocks have run up. Now Piramal is probably partly running on an expectation of the company wants to bring down debt to one-time book and wants to have a revenue of about 2 billion in a few years' time. Now, so now the next couple of quarters, we need to see whether it'll actually beating estimates. If that does not happen, the stock is likely to correct.
All right, so that's the take coming in on Piramal Pharma. But switching gears, let's take a look at what the consumption pack is doing today, especially the FMCG players, because they're under pressure. in trade today. You have most of them that have come out with their numbers. ITC is the major one that will be out with its numbers today. We have Snehi standing by to tell us exactly what should we expect from ITC when they report their numbers later today. Snehi?
Well, yes, overall we're expecting a largely decent quarter coming in for ITC this time around. If you take a look at the numbers on the standalone basis, we're pegging the revenue to be at 18,068 crore rupees compared to 16,550 crores, an uptick of 9.2% on a year-on-year basis. EBITDA is being seen at 6,506 crores compared to 6,042 crores, which is also up 7.7% year-on-year. Net profit we're seeing at 5,079 crores compared to 4,926 crores, which is up 3.1% on a year-on-year basis. However, we are expecting some pressure this time on the EBITDA margins. We're seeing them at 35.6% compared to 36.5% on a year-on-year basis on the back of subdued performance in the paperboard business. However, also some inflation in the leaf tobacco and other input products could lead to some pressure being seen on EBITDA margins. But this cut on a year-on-year basis, we're expecting that to not be very drastic because EBIT margins can partly also be mitigated through improved mix, cost management as well as calibrated pricing. But if you take a look at the other key expectations, we're expecting the cigarette volume growth to be seen at 3% year-on-year, cigarette EBIT growth at 5%. And if you take a look at the FMCG business, overall it's expected to grow at 6.5% with EBIT margin of 8.4% on a year-on-year basis. Hotels biz, we're expecting a 10% growth, EBIT margin for the hotels biz coming in at 20%. Paperboard growth is expected to decline 4% on a year-on-year basis on subdued domestic demand and weak exports. And paperboard's EBIT margin is being pegged at 13.5%. What's going to be important to watch out is cigarette volume, the cigarette volume growth, hotels and agri-biz outlook. Any commentary on change in the BAT stake? We've been hearing reports about some stake exit coming in, so that's going to be an important factor to watch out for. FMCG growth and margins, paperboard demand trends as well as pricing strategy by the company. All of these are going to be some important comments to watch out for during the numbers. But well, yes, largely decent quarter is what we're expecting from ITC this time.
Okay. Let's change gears and talk about PSUs again. The fall in PSUs, first the rise and the fall. Let's look at the rise first. The 3-year change, let's send some popular names, HAL, Kochi Shipyard. What do we have in terms of a BL? Now that's how they much have fallen from the high. So the high will look very strong. This fall will look like, oh my God, the building has collapsed. And you know, stock after stock in the PSU space has taken it on the chin. Index is down 14%, but 2 years HAL, let's look at it please. 2 years HAL, BEL, BHEL. If you analyze any of those stocks purely based on the last 2-year data, guys, 2 years, this is today, I think they still are in the positive. Chakri, where are you hunting in this space?
You're absolutely right, Nikunj, in terms of, the stocks have done phenomenally well at the last 2 years. In this space, we're not really hunting anymore simply because the last 2 years, the narrative was the company's earnings will continue to accelerate and therefore justify the growth outlook and the PEs. Now, there has been a certain amount of order growth slowdown, and therefore the PEs are also correcting down from 70 to 60 times some of these stocks to about, the stocks are down 40-50%. So I think, every once in a while, like you got Mazagon, which got an order a couple of days ago, there was an uptick. I think that's going to be the story rather than them being there no longer value-wise.
The Bank Nifty today is holding on. And Aditya, what is the importance of the Bank Nifty today? Because suddenly it is showing signs of life.
Definitely, there is some kind of a buying that we're seeing in the banks, and interesting is it's not broken the key support levels of 51,200, which it's seen in trade yesterday. So at current levels, it looks like Bank Nifty could be the one which could actually lead if we see any kind of short covering rally in the markets, significant one I'm talking about. So 51,400 for me on the downside is a very key support area. If these levels hold, I would be a buyer in Bank Nifty for a target of 52,200, about 52,400 as well. Looks very interesting to me, the chart setup of Bank Nifty and some of the large banks, predominantly the private sector ones, and HDFC being the best amongst the lot. Looks interesting to me and could be the one that can lead the rally in the Bank Nifty overall.
That's about the Nifty Bank and which side is headed from here on. Coming to you actually, Naresh, I wanted to get your quick view coming in on 2 large cap players. One is Reliance Industries, one is HDFC Bank. How are they looking to you on the charts? Because they're the ones that everyone talks about as the go-to place if you're looking for a long-term investment in the large cap arena.
Paced, you have Reliance Industries just down from 3,200 all the way down to 2,650 to 2,700. So decent enough correction done here, 15 to 20%. And back to the same prices where it was a 1 year back, as well as say almost 3 years back if you remove out the geo part of it. So looks very interesting in terms of a possible bounce back. And then we go to HDFC Bank. It is on the other end of the spectrum in terms of back at that 1750, 1780 mark, which was the top in 2021, as well as in 22, 23, 24. And if that breaks above 1780, 1800, you have a large cap, largest weight actually taking leadership. So these two names comprise 20% of the Nifty and are more very interestingly poised. And that's the reason the possibility of an upside looks more going forward once the selling abates from FIs.
All right, so that's the take coming in from Naresh when you talk about Reliance and HDFC Bank. In fact, we pose a similar question to Gautam Shah also. Let's hear out what he had to say.
I don't see it heading anywhere. I think it's been a very difficult chart, to be honest. In the good times, the stock did not participate. And in the difficult times, the stock is leading the market down. Even now, the setup is quite weak. I think the stock is headed towards levels of 2,500 and below. And even if the markets start to rebound, I don't see Reliance coming back anytime soon. So broadly, it's going to stay in this band of about 2,500 to 3,000. On the other hand, if you look at HDFC Bank, because for large investors, it's really about whether HDFC Bank or Reliance. I do believe the way HDFC Bank has behaved in the last 2 months and the way 1,600 as a level has worked out brilliantly, I do believe that over the next 1 year, at some point of time, you are going to see HDFC Bank get at levels beyond 2,000. And I think that will be an event which the market will celebrate.
All right, Chakri, let me come to you and let me ask you your view coming in on Reliance Industries, especially because everybody's been waiting for this one also to turn around. No doubt everyone tends to forget that this one has actually seen a decent performance as well. But it's been consolidating. Everyone's worried which side of the fence Reliance Industries is going. Everyone's eyeing that value unlocking when you talk about the retail business, the geo business. What's your take on that one?
Reliance Industries, I think, of all companies, is well positioned actually for even in the medium term, for the simple reason that cyclically oil has gone through a very volatile phase. Therefore, GRM margins have swung quite crazily. On the other hand, retail business in general is seeing the same slowdown that we're seeing in the broader level. And the geo business is doing okay, all right. So if you add up all these things, that comes up to the more or less the current stock price, doesn't take into account, which is a third roughly. And so there is no value given to the new energy business, which is actually substantial and real. So if you add all these things together and you believe, then I think the line should be much higher.
All right, so that's the take coming in on Reliance Industries, but you also have IndusInd Bank that is going to be reporting its numbers later today. We've seen most of the banking players trying to play a catch-up trade, but IndusInd Bank, what should we expect when they come out with their quarterly numbers? Gaurav is here to tell us that. Gaurav, over to you.
Well, yes, when it comes to numbers for IndusInd Bank now, analysts are expecting some kind of weak set of numbers from IndusInd Bank. We have already seen that the growth was a little weaker than what the street was expecting when it comes to pre-quarterly updates, and the same trend is likely to follow. So when we talk about net interest income, we are expecting 8% growth on a YY basis, and this might be led by the low yielding segment, and that is the reason why net interest margins may also contract almost by 5 basis points. They are expected to be around 4.2% levels. When it comes to PPOP, now they are expecting some kind of stability in the OPEX side, and that is the reason why we may see some stable growth in PPOP as well. They're expecting 2% growth in PPOP. But when it comes to profitability, we may see a dip in profitability, and the reason being that when we talk about provisions, they might go up for the bank because bank has higher exposure to MFI segment, and that is the reason why credit cost is likely to inch up, and that is the reason why provisions are expected to go almost by 16% on a YY basis, and PAT is likely to decline almost by 2%. Apart from that, we have already seen that from the pre-quarterly updates, deposit growth was at 14.7% while advances grew almost by 13%, a little bit lower than what the street is expecting. But any kind of commentary on the MFI segment is going to be a crucial thing for bank, because what we have seen is that we have already seen some kind of stress rising in the microfinance segment. And apart from that, any kind of commentary on the rate of term deposits also is going to be crucial, because if we compare the rate of term deposits with its peers, for IndusInd Bank it is at a higher end. When it comes to commentary on the growth outlook, that is also something to be looked at, and how the loan growth is going to be for the bank is also going to be something that analysts will be looking for IndusInd Bank. But definitely in terms of numbers, we are expecting some kind of softness when it comes to second quarter of FY25.
Interestingly, that Kotak Mahindra Bank and HDFC Bank, they've stopped falling after numbers. I mean, Kotak Mahindra Bank fell for one day and now it seems to be stabilizing. Chakri, is it time to buy into Kotak Mahindra Bank now? I mean, with HDFC Bank, things are improving, but for Kotak Mahindra Bank, you pretty much are buying now, then you'll be buying at the peak of pessimism.
You're right, Nikunj, in terms of, the peak of pessimism. I think, the positive triggers for Kotak are still not evident. The management is in a churn. They have a new CEO. The existing, some of the top guns may be leaving the bank. And so I think that kind of, puts a lid on the valuations. And because the valuations by in itself are still probably one of the highest of all the private banks. So given this, and the credit card portfolio is actually, for the whole consumer, is weak. Credit card portfolios are weak. Margins are coming down. Apart from the usual cyclical factors, an uncertainty in management churn is likely to hold back the stock.
Aditya, which are 2 or 3 stocks you would say use every strength to sell?
Every strength to sell, Nikunj. So one stock would be a polycap for me. I think stock has run up too much and then sitting at extreme overbought levels. And I think the correction in polycap is still has not completed yet, I would say that. And then you could see more likelihood of a downtrend continuing in the stock. So on every rise, I would look to sell polycap. If you get a rise from here on, maybe close to 6,800 or maybe 7,000 if you get, it's a perfect candidate to sell on a rise. If I look at some of these, we were talking about defense stocks, so they too look very extremely negative and weak at the moment. So any pullback in any of these names, be a Cochin Shipyard or maybe a Mazda Dock, they could also be candidates for good sell on pullback. So all these spaces are where the correction is not over yet, and I believe you would see more pressure in the coming times.
Okay. Raise the same point, which is that, look, everything in this market is not straight line. There are some stocks which will just bounce back and then they will start falling again. Which are those stocks which you think should be sold on every strength now, because the party is over there?
So names which have clearly started topping out something on the consumer side. So something like Havells, which has topped out and is drifting lower, has already fallen a lot. Polycab has already fallen a lot, but bounce backs will continue to see selling pressure. Same way ABB, Siemens, which have created double tops. So a bounce back from here on will continue to see selling pressure. So these are the names more on the capital goods side as well as consumer sides.
Trade, let's say, for this week till Diwali. I mean, no trade, play for a Diwali bounce. Suresh?
So play for a Diwali bounce would be to look at, say, the Nifty itself as closer to 24,400 to 24,200 band.
Right. Chakri, I wanted to come to you next, given the fact that in the next 3 months, you have a lot of triggers coming in for the market. You will have the US election verdict. You will have also the state elections back home that one will be watching out for. Where do you see the markets in the next 3 months or going ahead in the next 1 year or so, given the fact there are a lot of triggers at play?
To use one of those fashionable terms, it will be a listless market when they say. But, I think more importantly, the earnings are being cut. And that is simply because, there were 2 things that was expected. One, there would be a demand surge, which did not happen. Second, there would be a fall in inflation, therefore interest rate cut, which did not happen. As a result, earnings are being cut for companies. So where earnings will not be cut is in IT, to an extent pharma. I think industrials cut is pretty much done. So I think those are the places I think we can still buy, because some of the places they have corrected fairly well.
IT, pharma, industrials are the ones that look well placed actually going ahead. And talking about these names, especially in the industrial space, anything is looking good at this point in time. Naresh, on the charts to you.
So would be a little careful here, let it bottom out as such. So a lot of these names have had really good 2 years, and for now they're consolidating. So the bounce back may not be very sharp.
So that's the take coming in on the industrials. But let me actually quickly take the BTST ideas from our experts. And Aditya, do you have any BTST ideas for our viewers today?
Cheryl, one stock looks interesting to me. Hindustan Zinc stock had fallen off the cliff, and from there on, stock did form a base. It looks like it's now coming out of that consolidation base. So at current levels, offers an excellent risk to reward. I would be a buyer in the stock with a stop loss just around 510, and look for a target of at least 620 on the upside.
That is Hindustan Zinc that's looking attractive to Aditya. But on that note, thank you so much, Naresh, Aditya, as well as Chakri and Sandeep for joining us on the show and taking our viewers through the market and the market action. At this point in time, we are looking like we are going to end pretty flat for the markets, which is good given the fact that this week also has not been that great for the benchmark indices. Flat around 24,400 mark is where the Nifty is looking to shut shop and trade. Nifty Bank, that's the one that's been holding on to the positive territory, ending with gains of about 0.6%. However, the market breadth has been weak through the course of the day. Broader markets, they've been underperforming the benchmark indices and looks like they are in for a weak end for the trading session, with HUL being one of the top losers on the Nifty. 5.8% downtick on back of the earnings. You have SBI Life, Hindalco, Nestle, as well as Bajaj Auto among the consumption names that are under pressure in trade today. Ultratech is the one that is holding on to good gains. Take a look at what Laurus Labs is doing, because the numbers just came towards the last hour of the trading session. And there you go, positive close coming in for Laurus Labs, and that also has to be given the commentary coming in from the management. You have ITC, all eyes on that one. That will be reporting the numbers later today, as well as IndusInd Bank. So for now, we've ended absolutely flat when you talk about the benchmark indices. With that, we are out of time on this edition of Closing Trades. Thank you so much for watching.
Trying to catch up the entire game, and we saw that with a vast array of shots.
If you like this video, then like, share and subscribe to ET Now.